Hey traders, Raghee here, and one of the trades that I really like in the morning, and it allows us to be a little aggressive when it does occur, is a V-score low buy. Now, this is looking at volume. So we have a range here in the morning. So this is looking at volume and the standard deviation of the volume weighted average price. And that's what allows us to take a look at where the volume is bottomed out, almost like looking at a line chart. The subchart here is almost like looking at a line chart. And so if I know that we've been bottoming, almost like a double bottom or a triple bottom, we know that this -2 has been in play. We know that subsequent hits on that are going to be, in a way, oversold and support. And that's what we took advantage of this morning. Now, today was pretty choppy, so I feel very happy being able to take a move like this and basically managing that with a break-even stop into the midday doldrums, which is the 11 to 11:30 window. Now, right into the end of that 11:30 window, we saw this sudden drop. Now, lately we know whenever we see sudden drops like this, it is absolutely going to be some sort of news related to the stimulus package. Interestingly enough, this one sold right off, landed in the HPMR, and was just for a brief amount of time quickly faded. Now, I'll tell you, by this time of day, I'm pretty much done. I'm able to look at the slew of trades that we looked at this morning. What was on our watch list? Long XLC, long Facebook, instead of the NASDAQ, which was pretty weak this morning, relatively speaking. We were looking for long S&P, we were looking for long Dow. So that was the watch list. And as long as I stuck with that between 9:30 and about 11, I'm good. And what do I do between 11 and 11:30? I start to wind down my trading. And I think a lot of traders who struggle with day trading would do very, very well to sort of keep an eye on the window between 9:30 and 11, and then really have a cutoff at 11:30. Just say, you know what, this is the end of the morning, and just have a cutoff at 11:30, rather than what a lot of traders tend to do is they've spent the first, say, 90 minutes of the morning warming up and watching the price action, and then by the time 11 o'clock comes, they're ready to start trading, right? Their activity goes up, and I think the volume and volatility for the morning starts to contract for the most part. If you look at historically, the market tends to contract after 11. Let me show you actually. So this is the 24-hour hourly breakdown of the S&P. And what you're looking at here, so here's your S&P. What you're looking at here is the individual hours broken down to their high, their average, and low price movement range per hour, right? Notice how it picks up with the Wall Street open, and it drops down as we go into not only the midday doldrums, the lunchtime hours in the US, but also the wind down of the European and UK markets. So you can see how the volatility contracts, and that's what I mean by that. We want to take advantage of this. We want to start to wind down by this stuff this time, by the time we start to contract in terms of volatility. So that's why I take a morning, what I call an AM approach to my day trading. Very much oriented to 9:30 to 11, and I'm winding down, I'm managing what I have, canceling orders that are likely to be unfilled, putting in break-even stops if I have, and putting in trailing stops if they're justified between 11 and 11:30, and that's it. That's the morning. So think about that. Use time to your advantage. Use this kind of rhythm to your advantage, and see if it doesn't make a big change in your day trading. I'll see you in the next update.